Hello everybody, Tortoise Investing coming at you today with the top 3 REITs to buy and hold forever. These 3, when compared to the S&P 500 over the last 10 years, have absolutely beaten the S&P 500. S&P 500 coming in at 378%. One of these coming in at 426, the other at 751, and the other at 1,398. Now, which ones are these? Before we dive into those, if you are new, please join the 285 that have already done so by hitting that subscribe button. I would greatly appreciate it. Let's march on to 300, march on to 1,000, and keep growing this baby together. Make sure to like and comment down below. Greatly appreciate it. Now, without further ado, let's go ahead and dive in. So if you're here just for what they are, the first one on today's list is Extra Space Storage. The next one is CubeSmart. And lastly, Agree Realty Corporation, this one being a monthly payer. So if you came just for what they are, thank you for dropping by. Make sure to hit that like and subscribe button. And if you're here for a deep dive into them, let's go. Alrighty. So we got Extra Space Storage here. It's got a dividend yield of 4.19%. Pretty nice. There you got a good revenue, EBITDA, cash flow stream. Look at that. That is going in the right direction with literally everything, and you like to see it. Their dividend has been increasing at a rate of 15.74% average over the last 5 years. That is bonkers. That is amazing, especially for a REIT. Awesome. Love it. Love to see high dividend growth out of my REITs. Now, if we look at their FFO, they did miss on the FFO, although it not being a very big one. The FFO came in at $2.02 a share, missing the consensus estimate of $2.05 per share. Now, with a lot of these REITs and stuff, they're going to be impacted by the interest rates right now being up. But by the end of this year, we should start getting some cuts. So these REITs are going to start looking really good again. My personal opinion, not a financial advisor, educational and entertainment purposes. Anyways, so they missed on their FFO, but again, interest rates are crazy right now. CubeSmart, another one that's got a above 4% dividend yield, 4.26% dividend yield. Same story, very similar revenue, EBITDA, cash flow growth, net income, EPS, everything going in the right direction. Don't really care about EPS all that much of these. Take a look at the dividend. The dividend over the last 5 years has been growing at a rate of 10.31%. And it looks like over the last 2 years, they have sped things up a bit. Yep. They've, over the last 2 years, it's been an average of 20%. So they are increasing how quickly they raise this. So another thing you really like to see. Alrighty, so CubeSmart, they matched on their FFO, funds from operation, at 65 cents per share, which is in line with the estimate. And last year they had 58 cents per share. So growing. Very nice. Another one that I like. We'll take a closer look at the stock comparison whenever I am done here. Now, Agree Realty, I really like this one. I like this one a lot because it's a monthly payer. If you like monthly paying dividends, this might just be the one for you. Got a dividend yield of 4.28%, and very similar to the other two, that revenue, EBITDA, cash flow, net income is just ticking right along. Over the last, it looks like they had I'm assuming that they had a dividend cut in 2020, as did a lot of things have a dividend cut in 2020. But they have been raising their dividend by a rate of 5.82% over the last 2 years. So, I mean, besides the 2020 hiccup, that might be a stock split. I don't know. I'll have to dive deeper into it. Either or, I like this one more than Realty Income. I don't know, put down the pitchforks. The reason being is this has a lot more... you gain a lot more over time with the stock. Realty Income kind of just does like a little swoosh right along. It goes up, but not as much, as I will demonstrate here. Boop. Realty Income. Pop it in there. And see, if you put $10,000 in realty income 10 years ago, you'd be up 246% on your monies. I mean, it's not bad. But what this performance comparison does, and the reason I love it so much, is this adjusts for splits and dividends. So this is everything that you're seeing is just raw, what you would have gotten, what to expect if you'd have put money into it 10 years ago. It's another big reason why I chose these three is because they have 4% plus dividends, and they beat out the S&P 500 over the last 10 years. Amazing. Absolutely amazing. If I can get that over 1,000% return in 10 years on any stock, I'm about it. But yeah, guys, that is everything I've got for you today. Thank you for dropping by. Look forward to Wednesday when we do 5 more dividend stocks you can buy and hold forever. I'm sure there's going to be some price changes and some chaos and a couple more earnings since then, so I should be able to bring up a new list for yins. Take care, guys. See yins.